This is important. You can look at your financial statements, see your profit and loss statements in your balance sheet. On your balance sheet, you can see what assets you hold and what liabilities you still owe. For example, for assets, it could be like fixed assets, like any vehicles you owe, or you own, cash on hand, any prepaid expenses. Liabilities could be loans, just normal AP monthly payments, things like that, or unearned revenue. For example, if a customer puts down a security deposit, and that could be listed as unearned revenue as well. Taxes here, this is payroll taxes and also sales tax as well. Mileage down here, mileage reimbursements for your employees. Yeah. Let's see, we got gear icon right here, your settings. You can manage users. You can add an accountant. You can add employees here to enter their weekly time. Chart of accounts, we'll talk about that later. All lists, these are like classes, products and services that you provide. And tools here, order new checks through QuickBooks Online. You can import data like new vendors or customers. If you switch accounting softwares, like for example, desktop to QuickBooks Online, you can import your customers that you had on desktop or vendors and import it here. Export data. You can export a list of your customers, outstanding balances, balances due. Reconcile, this means reconciling your bank account each month to see what checks are still outstanding that haven't cleared the bank yet, or deposits in transit, like checks that you have but haven't been deposited to the bank yet. And here's your budgeting is next. You can create a budget in QuickBooks Online and see how you're doing against your monthly goal, yearly goal, or 3-year goal, things like that. You can look at it month to month, year to year. That's pretty much it for navigating options. I'm going to switch back to the PowerPoint slide. Can't see the PowerPoint? Screen can confirm?
Yep.
Dashboard. So we were on this page earlier, so we're going to talk about what you can see on the dashboard. So we're going to talk about bank balances, invoices, payroll expenses, the P&L, the profit and loss, and sales. So go right back to QuickBooks. So here's a dashboard. We can see is the invoices here. So this is called cards on the dashboard. So I got the invoices card, expenses card, profit and loss card, and sales card. Then you have a list of your bank accounts that are linked to QuickBooks Online. If they're not linked, it won't show up on here. So the invoices card, you can see the past year, like what hasn't been paid yet. So you can see here 5,000 is unpaid for this sample company that we have, Craig's Design and Landscaping Services. You can see out of that 5,000, 1,500 of it is overdue, and 3,000 is not due yet. Then you can see down below here, 2,000 have been collected but not deposited, but 1,600 have been collected and deposited. And for expenses here, you can see for the last month what types of expenses that you incurred. For example, $750 in maintenance and repairs, $400 in cost of goods sold, $400 in legal professional fees, and everything else, $600. The next card, the profit and loss, we can see here is for the past month, the net income, which is the revenue minus expenses, is $1,700 for the past month. You can see, so we got income here, 3,900, and total expenses for the past month, 2,100. That nets into a $1,700 net income. Going down to sales, you can see here for the past month, sales were, there was only one sale of 3,800 in the past 30 days, and it dropped to 0 after that, from August 30th to September 22nd. For bank accounts here, you can see there's 3 bank accounts are linked. So you can see here, so the first one, the checking account, the bank balance, and QuickBooks, our bank balance is negative 3,621 in QuickBooks. That's due to outstanding checks that haven't cleared the bank yet. Savings, you can see bank balance 200 and QuickBooks 800. And a MasterCard, that's a credit card that's linked to QuickBooks. So you can link credit cards as well. You can see the bank balance on the credit card is $304 and the QuickBooks $157. So these are on the dashboard, these are like quick things you can check on if you have like a few minutes each day to see how you're doing in your business.
David, there was a question that came through the chat if you have just a second.
Yep.
Someone wanted to know what the difference between the QuickBooks Online and the QuickBooks Desktop version is.
That's a good question. There's not much of a difference. I think QuickBooks is trying to get most of their customers switched to QuickBooks Online. QuickBooks Online, there's more opportunities to streamline things like banking. You can sync the bank account from to QuickBooks, so you can create rules and streamline things to make things more efficient. There's not much of a difference unless Shreen, do you know any other?
There's some small differences that QuickBooks Online, so with QuickBooks Online, there's different packages. And the highest package is obviously the most costly, but it has all of the services that a QuickBooks Desktop would have. There's tiny things like batch invoicing that QuickBooks Desktop normally has, whereas in QuickBooks Online, you have to get the Premier, the top package. But David is right in that QuickBooks Desktop is phasing out. So as of, I think it was May 2020, I think they stopped doing add-ons in QuickBooks Desktop. So eventually QuickBooks Desktop won't even be an option. So just to keep that in mind. Yes, the subscription is monthly. And I can pull up the monthly packages for you as well. And I would have to look into the question about the contractor edition of QuickBooks Desktop. All right. But Annette, yes, I can pull up the prices for you. They're online.
And I think we can also do like a short Q&A afterwards too, if you wanted to go ahead and continue. And then Sharon, whenever you're ready, just let us know.
Sure.
Okay, I'm gonna go back to the PowerPoint slide now. Okay. So next up, chart of accounts. So chart of accounts is pretty much your assets, liabilities, and equity. Accounting terms, there's a formula, assets equals liabilities plus equity. So assets are the things that you own, for example, cash, so your bank accounts. Prepaids, which is pretty much expenses that are prepaid in advance. For example, annual subscriptions to accounting software or insurance, subscriptions like ADP or payroll, and other assets. So fixed assets are like vehicles, trucks, buildings, heavy equipment, tools, things like that. For liabilities, liabilities are things that you own, I mean. So like accounts payable, you get a bill, you owe that bill. It's a liability. Payroll, your employees' payroll for their wages that they've earned. Accruals will be, for example, if your employees have earned a vacation, you should accrue that so you can expect, have money aside to pay those out if they're paid vacation, or if the employee quits and they get their vacations paid out, you have a liability there already, so you're aware of it. 401ks in retirement, any like 401k retirement withholdings from the employee's paychecks or employer contributions. Those are liabilities as well if they haven't been paid yet. For equity, so owner's equity is pretty much contributions made from the owner to start the business pretty much, or to fund the business. Retained earnings is accumulated net income. So for example, net income is like for the current period that we're looking at. Retained earnings is accumulated net income for the prior periods. For example, like net income will be 2020 of this year, and retained earnings will be accumulated net income for 2019 and before. So let's look at QuickBooks Online and look at how to create chart of accounts in there. So you can see here, so you go to, there's settings here, then you go to chart of accounts. So you see your chart of accounts. So here, this is the main page of chart of accounts. You can see you can create a new chart of accounts if you have a new asset or liability that you want to create, or new expense or revenue account. So you click new, you can click the account type. So accounts receivable, other current assets, bank, fixed assets, other assets, credit cards, other current liabilities. Long-term liabilities could be like mortgages and other loans. We've got income accounts that you can create and expense accounts that you can create as well. And also you can create sub-accounts for accounts. For example, if you had like a revenue account, you can create a sub-account for, let's see, like remodeling. You can create a sub-account for a bathroom remodel income, things like that. Okay, and here, down here is your list of chart of accounts in the QuickBooks so far. So you can see we've got the bank accounts, we've got the accounts receivable, inventory, if you have any inventory, prepaid expenses. So pretty much the list goes from assets, liabilities, and equity. Any undeposited funds. Undeposited funds are pretty much cash or checks that you received that haven't been deposited to the bank yet. If you have it on hand, it might be on your desk or in your wallet or so, but haven't went to the bank. Accounts payable, these are bills due to vendors. So we got the credit card. So you can see here, QuickBooks balance 157, the bank balance is negative 304, and that's probably due to overpayment on the credit card or maybe a refund of some sorts. That loan payable. And here's the income accounts right here. So we have billable expense income. Design income is an example of an account that you can use. Any discounts given for services provided. So these get netted together in income. Discounts doesn't go into expenses. It goes up into income to net with the related income. Landscaping services is another example of income. Labor. There's a category for other income. If you have like any like unusual income, could be credit card rewards or things like that that isn't usual, that isn't recurring or usual to the company. Then we go down to cost of goods sold. Cost of goods sold is pretty much any expenses related to the income, the service that you provided. So these are like non-overhead costs. For example, if you're a landscaping company, like this sample company here, Craig's Landscaping Services, this could be like soil that you had to buy to do the landscaping for your customer. Or maybe a bathroom remodel, you had to buy some type of caulking or vanity, things like that. And we go down to expenses. We have advertising, that's pretty common. Advertising and marketing usually put together sometimes. Automobile expenses will be mileage, gas, sometimes repairs and maintenance, oil changes, bank charges related to your checking account or credit card account. Let's see what else. Equipment rental. If you need to rent an equipment, for example, if you're a landscaper, you don't have an aerator, those are pretty big equipment items, and maybe you don't own them. Maybe you just have to go rent it for a week to do aerating services. This is where it's going to go. We have insurance, another job expenses. Scrolling down, we have legal and professional fees. So we have like accounting fees, bookkeeper fees, which are related and similar, and attorney and lawyer fees. And we go down, maintenance and repair. Any repairs or maintenance to your building that you own, or vehicles or equipment that you own. For example, your vehicle, you could repair the tire, things like that. Going down, meals and entertainment for your employees or for yourself, or meetings, staff meetings, office expenses, pencils, paper, ink, things like that, and so on. So you can pretty much create any chart of accounts you can use, and QuickBooks provides templates that can help you. Yeah. Let's go back to the PowerPoint slide. So QuickBooks, you can also create classes in QuickBooks to track how you're doing for each service line you're providing. For example, here, so residential versus commercial, you can create different classes for that. So you can see how you're doing in the residential side versus commercial side, and which one's profitable or which one's not. And maybe you can decide, like, maybe one of them's not worth it and cut that service line if needed. And also new construction versus renovation. So this snip right here, you can see, so the classes are these columns right here. So we've got new construction, remodel, overhead, and unclassified. On the left right here are the chart of accounts that we sort of talked about. So you can see the income accounts. You can see new construction and remodel. Like you can see for new construction, your total income for this period, which is December 1st to December 15, 2017, you made $18,000. Then you had job expenses of $14,000, which is net of around $3,000 or $4,000. And remodel, you can see here, total income, revenue received $33,000, and job expenses was $1,800. And you can see the remodeling service line looks a lot more profitable because the net income for that one is around $31,000. And I can show you how to create classes in QuickBooks. Go back to my screen. Just go to settings, go to all this. Then you go, first I have to actually turn it on first. So if you don't have it turned on, you can go to account and settings. Go to advanced. Then let's see. Let's see, where is it? Classes. So I don't think, so the sample company, it won't let me create classes. But you can see from the snip, I can show you later, if you ask me after our class, I can show you how to create classes. But here are the benefits, like I showed you before, of creating classes. You can see which service lines are profitable or not. Let me switch back to the PowerPoint. Can you still see the PowerPoint, Shrink? Can you confirm? Yeah, okay. Budgeting. So budgeting in QuickBooks Online, or if you haven't budgeted before, pretty much estimates your revenue and expenses over a specific period of time. It could be a month, a quarter, a year, a 3-year period. You can see how you can see how you're doing against your goals for the company. And you can easily create budgets in QuickBooks Online. Here, QuickBooks settings. Hopefully it'll let me create budgets in here. So you go to settings, go to the tools column, and you go to budgeting. You can add budgets here. You see what pops up down here are your income and expense accounts. You can create a name for your budget. For example, let's go fiscal year 2020. And this fiscal year, it'll grab all the QuickBooks data from January 20 to December 2020. Interval, you can do a monthly, quarter, or yearly. Pre-filled data, you can import the data that's already in QuickBooks into this, the actual data. So let's see, fiscal year, and you click next. Then you can enter your estimated income for each month of the year, for each account, income and expense account. Or you can, let's go back, or you can do it at a yearly interval. Let's see, fiscal year 2020. Next. So if you just have a yearly budget, you can see January through December and just have one number for the year. We've got the income accounts. So landscaping services, fees billed, labor, other income, interest earned from investments, cash accounts, savings, checking accounts, got cost of goods sold, and so on. So that's how you create a budget.
And this is another one where the type of QuickBooks Online that you subscribe to makes a difference, because with the advanced program, you're able to import a budget, whereas the ones, I think it's Plus and lower, you're not able to import budget. So depending on how large your budget is and how complicated or complex it is, you might consider either doing the advanced QuickBooks Online or doing an add-on type of budget software that plugs into QuickBooks.
Okay, going back to the PowerPoint slide. So products and services. In QuickBooks Online, you can add your types of services that you provide or products that you provide. Let's go back to QuickBooks. Go to QuickBooks, go to products and services here. So you can add new products. Click here. It could be an inventory item that you sell. It could be, for example, landscaping gloves, small tools, clothing, shirts with your logo on it, things like that. Non-inventory items will be, types of, nuts and bolts used in the installation that says right here. Services, landscaping, remodeling services, roofing, gutter installation services, things like that. You can see here for Craig's landscaping services, you can see he has a service line item right here for design services for the landscaping. You can add the sales price for this service. Then fountains, different types of fountains, the concrete pump, rock fountain. He has different sales price for each. Then you also can have the quantity on hand as well. So it looks like Craig has 25 pump fountains and 2 rock fountains. Other products and services, so other services, lighting, installation or installed lighting, landscape lighting, so garden lighting, rocks, garden rocks, and other types of services. It's easy to add this at the top here. And we've got sprinklers and pest control. These are examples that you can use. Just customize it based on your types of services that you provide to your customers. Okay, let's go back to the PowerPoint. Here, recurring transactions. You can, if you have like recurring transactions, for example, like telephone bills, like here, or monthly building lease, or mortgage payments, accounting fees or attorney fees that are pretty much the same each month, you can program QuickBooks to enter these automatically. So bank transactions or bills or invoicing or sending estimates to your customers, they're recurring, things like that. And to do this, the QuickBooks, the setting, go to, so gear icon up here, top right, go to list, recurring transactions. You see we got the telephone bill and the monthly building lease. So you create new, let's say, let's create a recurring expense, for example. Actually, let's go over all of these. So these are the types of recurring transactions you can create. So non-posting charge, check, non-posting credit, credit card credit, which is pretty much a refund from your credit card or maybe a rewards, deposits, credit memo estimates, and so on. So let's create a recurring transaction for an expense. Select transaction type, expense, click OK. So let's say template name, let's say accounting fees is the same each month. Say type, let's so scheduled, so it creates automatically. Let's say let's create 1 day in advance before it hits the bank, for example. Payee, let's see, let's pretend Fidelity is our accounting service provider, and it hits our checking account each month. We get charged monthly on the, say, the 5th day of the month, of every month. And let's start in October of 2020. And let's end date will be none until services are canceled, or maybe the rates increase or decrease. Then we can change it then. Payment method will be cash, let's say, or check. It's fine. Or check. Let's go check. Go to category details. So accounting fees. What tax category fits? So this will be the professional legal expenses that we talked about earlier when we talked about chart of accounts. So we go here, legal and professional fees. So these are accounting fees. Go here, description. What we can do is monthly accounting services. Let's say the amount is $1,000 per month. And save template. And then you can see here, it will create the next expense item on October 5th, 2020, for $1,000 for this accounting service. So that's how you create recurring transactions. Like I said, there's other recurring transactions that you can create to make things more streamlined and efficient. So you spend less time doing your accounting, I guess. Yep, so let's go back to the PowerPoint slide. Timesheets, I think I mentioned this earlier. You can give your employees access to QuickBooks online to enter their time worked. And these employees can record like which customer they worked on, which project they worked on, and can bill the customer through these timesheets. I can show you real quick in QuickBooks Online how to get there. So you go to new over here, employees column here, and weekly timesheet. Up here is a list of employees or vendors. Well, let's go with employees for their time. So let's go with John Johnson. So for this week, September 21st to September 27th, you can choose which customer John Johnson worked on. Let's go with Amy's Bird Sanctuary. Did design services. These are billable to Amy's Bird Sanctuary. You record this taxable or not. Let's go taxable. Let's record for today, let's say 3 hours of time to Amy's Bird Sanctuary. So you can see here, 3 hours, billable, 225, 75 times 3 is 225. And you can also add more customers that John Johnson worked on for the week. So you can see if I save and close, and if I go to Amy's Bird Sanctuary, let's see, go customers, and look up Amy's Bird Sanctuary. The 225 should show up of the time charged. Let's go here. You can see here, John Johnson worked 3 hours, billable $75 per hour, taxable, and you can create an invoice right here from that. So create invoice. You can save, so you can see all the information is here. So Amy's billing address, email, you can see design services, description, custom design, quantity, which are the hours, and the rate that's $75 an hour. They're in California, so there's an 8% tax, so it's $18. You can see balance due, $243, and save and send. So once you save and send, it'll email directly to Birds at Amy Bird Sanctuary's email. Save and send, and it gets sent to the customer, just like this, and this is how it would look. You can customize the email here the way you like it. Okay, let's go back to the PowerPoint. Let's talk about accounting methods that you can use. I'm not sure if you're familiar with it or not, but there's two bases of accounting that you can use. So there's cash basis and accrual basis of accounting. Cash basis is pretty much you record a bank transaction or a transaction when cash is received or when cash is paid out. For example, you did a landscaping service for a customer one day, and you don't get paid for a month later, you don't record that revenue until you receive that cash on a cash basis. Similar for expenses. Let's say you incur an expense on one day and 60 days later you don't pay it. It gets recorded as expense once you send out the cash and not when it was incurred. The accrual basis method is when the services were rendered. Cash doesn't have to be received, it just has to be provided. For example, so for landscaping services that we spoke about, so one day, say Craig provides landscaping services one day, and the charge was $60, but he didn't receive it until a month later. In that month that the services was provided, that is when the revenue is earned, even though the cash wasn't received a month later. Anything else, Shireen, that, yeah, is that good? Okay.
There are a few more questions that have popped up in the chat log if you have a second to answer some of those. So the first one was, would equipment you own but has not been paid off yet be considered an asset or a liability?
That's a good question. Both, actually. It depends, because you have equity. So if you put like a down payment on a vehicle, say, for example, the vehicle was $20,000, you paid $10,000 as a down payment on the vehicle, you have to take out the $10,000 loan. So that $10,000 deposit at the beginning or down payment will be recorded as an asset, and the other $10,000 will be recorded as a liability. But then there's another side of the entry for another $10,000 that will increase the asset value of the vehicle. So the vehicle's value is $20,000. You have a loan of $10,000. So it's both. Did I explain that right, Shireen? It might be a little confusing.
You're echoing a little. I think what you're saying is that, so when, let's say I purchase a vehicle for $20,000, I'm going to record that. I'm going to record the fair market value of that vehicle, or the value of that vehicle as an asset, and whatever the loan amount is, I'm recording it as a liability. As I'm paying off my loan for that vehicle or that asset, that liability is going to go down and your cash is going to go down. So yes, you're recording it as both an asset and a liability if you don't fully own that asset outright.
Yeah, and once you pay the loan off, there's going to be no liability on the books. It's all going to be an asset. Yeah.
Great. The next question is, someone was wondering if you are recommending that they change from the desktop version of QuickBooks to the online version.
I think, Trinh, you want to talk about that?
Yeah, I don't really want to make a recommendation, except that eventually it sounds like desktop will be going away. I don't know when that is. They've definitely been phasing out pieces here and there. However, I will say that I like QuickBooks Online because of the ease of access, but there are little things that they still need to work on in QuickBooks Online. And I know they are working on revamping it up so that it meets all the expectations you had when you were on desktop. So maybe wait, but also there is a benefit to moving over to online sooner so that you can get used to how it's working before they completely just cancel desktop going forward.
Great.
It can also help with the transfer from desktop to QuickBooks Online if you ever want to transfer over.
Okay, thank you guys. The next question is, does QuickBooks import well with takeoff programs?
So I did send Sharon a link to some QuickBooks Online apps, and I'll post that in for everyone to see. I'm not sure, Sharon, if that answered your question, but you can see all the apps or plugins that go into QuickBooks Online and see if there's ones that would work for you, what you're looking for.
And she did reply. She said that yes, it does answer her question.
Okay.
So the next one is previously when you were on that QuickBooks, or I guess the one that you guys have, what QuickBooks subscription are you displaying? Which version or subscription do you guys have?
I think this is like I think there's 3 options, I believe, Shireen. I think this is the middle one.
Plus.
Yeah, I think, but I can confirm after during the break if you like.
Okay, thank you. And then last question here, and then we can go back to the presentation is what's the difference between not billable or taxable?
Difference between not billable or taxable? I think these are 2 different things. So taxable is if it's, for example, a state that doesn't tax customers for the services, maybe like Oregon or maybe Montana. I think they don't do taxes. Billable was related to the employees' timesheets. So maybe, so the employees that was showing like 3 hours was billable to that one customer, but maybe that employee worked another 2 hours for admin stuff related to the company, and that's not billable to the customer. Yeah, did I answer the question?
Yes, it looks like it does.
Okay. Any other questions, Heather?
That is everything for now. Thank you.
Okay. Heather, when's our first, I think it's a good time to do a Q&A session because this is, I'm working on going into sales of customers, and that's a big section. So
okay.
Should we do a Q&A now or?
Yeah, we could definitely do a small Q&A. If anyone wants to drop their question into the chat box, I can read it aloud for you. Down on the bottom bar, there are also some reactions. If you wanted to, there's a thumbs up there if you want to use that. If you click onto the part where it says participants in your bottom bar, you can also pop that out and there's going to be a raise hand button. So if anyone does have a question that they want to do live, we can definitely do that. All right, we did have a question that just came through. It is, are there any advantages to the QuickBooks desktop version versus the online version?
Yeah, so I don't know all of the comparisons. We mostly use we actually almost 99% of our clients are on QuickBooks Online now because desktop version is going away. I would say the disadvantage of using QuickBooks Online right now is that there are just small things here and there that I've come across that are just standard in QuickBooks Desktop and are not standard online yet. I don't have a specific date when they are going away. I think I read starting in May 2020, they stopped doing some of their add-on features for QuickBooks Desktop. Payroll is an example. That one went away, so you can't do payroll through QuickBooks Desktop any longer.
Did anyone want to ask a live question? Is anyone having problems finding out where to raise their hand at? I can also walk you through that. Or if you want to go ahead, you can just unmute yourself and ask any question that you might have. I suppose we could give another minute or two to see if anyone does have any questions. If not, we'll go ahead and continue.
I'm going to unmute myself. This is Annette Demps from A&D Quality Construction Company. And my bookkeeper, we discussed about QuickBooks Online versus QuickBooks Desktop. how safe is QuickBooks Online?
That's a good question. I think they have all the security features that you would expect. Our IT department is pretty security heavy, and we've moved all of our clients to QuickBooks Online. I obviously don't know, I'm not the IT expert in QuickBooks Online, but they should have all of the security policies in place that you would expect an online cloud company to have.
Okay, second question is, how much of a transition would it be switching from my desktop to online?
So typically what we do is we send a QuickBooks backup file to our QuickBooks Online team. Okay. And it usually takes them about 2 to 3 days to convert it.
Okay.
They convert and they review all of the reports to make sure everything's balanced correctly.
Okay. And I am thinking anytime you're going to become subscription based, that means you're never going to stop paying.
That's a good thing now. Yeah.
That's why everybody wants everybody to be a subscription.
Yeah, recurrent revenue.
Customer.
Yeah.
Right?
Yeah.
So
and
now,
one thing to note too is that I have had customers where we wanted the batch invoicing, so we went to the highest level, but it was just not worth the big price increase, and so we just the next month we just went back down to the next subscription level. So there is that option too, if you're weighing these out.
Right. So what it would allow me to do is, instead of my bookkeeper coming to my physical location, she can actually just log in to my online QuickBooks and we can review via Zoom or be live, and those changes are live.
Yeah, and you can actually give her the accountant access. So if you had portions that you didn't want her to have access to for some reason, she can have her own login and then view it in an accountant version.
Okay.
Mm-hmm. That I would say is the biggest advantage is, we had most of our clients on desktop and sharing files back and forth and doing the whole backup and then worrying that everything was going to get lost. And
that doesn't work. I tried that. That doesn't work. That doesn't work. Something that it just never matches for whatever reason.
I know.
And you have to make sure you backed up the right file and don't touch anything until it's
done.
I'm very familiar with that. I tried that. That doesn't work.
Yeah.
So how long did you say, you might have mentioned this earlier, sorry about that if I missed it. So when are they phasing out? Did you say May of this year?
They started phasing out in May 2020. I know that they took away the payroll options in QuickBooks Desktop. So if you wanted to do QuickBooks through payroll, you'd have to do it online. Okay. I don't have a date of when they're going to officially end QuickBooks. I mean, I assume that you can use your own desktop version for as long as you want. Except for that, if you have any plugins, it won't work. And then eventually you won't be able to do an upgrade if you needed it.
Okay, gotcha. Thank you so much.
Yeah.
Yeah, thank you.
All right, does anyone else want to unmute themselves and ask any questions?
I have a question.
Go ahead.
So if you're just starting out a small business, what level of subscription would you recommend?
That's a good question.
It depends.
I would maybe start with the middle one. I think it's Plus.
And you can always upgrade too.
Yeah, you can always upgrade or downgrade.
Yeah.
At that time.
Yeah.
Thank you.
All right. Jessica, did you want to go ahead and we can take a quick break for everyone, or do we want to go ahead and keep rolling through here? We can start back up on the presentation.
I think we can go ahead and take a quick break.
Okay, perfect. I'll go ahead, and I think we're on track for a 5-minute break. So I'll go ahead and drop the time in the chat box. If you guys have any questions that you think of over our short break, feel free to leave them there or raise your hand, and then when we come back, we can definitely get those questions answered. All right, everybody, let's go ahead and meet back here at 3:05. All right, everybody, if we want to go ahead and come on back to our desk or wherever you're set up at, we can go ahead and get started. I am going to go ahead and put up our first poll for everybody. All right, there we go. So when you do get back, if you want to go ahead and vote on this for us, and then we can share the results after, and David or Shireen will go ahead and talk about those.
While you're answering your polling question, I did pop next door to our person that helps us with QuickBooks Online and QuickBooks Desktop, and asked her about the future of QuickBooks Desktop. And she said that we shouldn't worry about it because it doesn't sound like they'll be actually ending QuickBooks Desktop anytime soon. But do make sure that you are on a version that's 2018 or current. So I would I would just make sure that you're not in a 2017 desktop version. So good news.
All right, I'll go ahead and give everyone about another minute or two to go ahead and answer our first polling question. Looks like we're about 50% answered. Okay, I'll go ahead and end the poll now. And then I'm going to go ahead and share these results.
Okay, so the question is, which of these options is the best definition of an invoice? All of you got it correctly, whoever answered. So it's pretty much what you send a customer when work has been done and payment is due. So cash hasn't, or so that means payment has been made, but work has been done. Yeah.
All right, awesome. If you want to go ahead, David, I think we can continue on with the presentation.
Okay. So next part of this presentation, we're going to talk about sales and customers. Talk about the workflow, talk about the sales center in QuickBooks Online, how to add customers and what types of information you should add about the customer in QuickBooks Online, sales receipts, online invoicing. Kind of talked about that earlier on, being able to send invoices through QuickBooks Online to the customers, and entering receipt payments related to this invoicing. Talked about this earlier, cash basis versus accrual basis of accounting. So we're going to talk about the sales and customers part of it. Cash basis, so this is for clients who get paid at the time of sale. This is pretty straightforward and simple workflow. So pretty much step one, there's a sale, which is pretty much services or products sold. So you create a sales receipt when the cash or check is received and deposit that to undeposited funds, which is one of the chart of accounts in QuickBooks that we talked about. So these are checks and cash that hasn't been deposited to the bank yet. Step three, money is taken to the bank. And when that has happened, the deposit transaction is created in QuickBooks Online, which reduces the undeposited funds, saying that you made a deposit to the bank, which increases the bank balance. Step five, the bank deposit is matched to the bank feed in QuickBooks Online. Accrual basis for our sales and customers workflow. Pretty much step one, service is provided or the product is sold. The customer is invoiced for those services. Then the customer pays for that invoice later on and not at the time of sale. So step three, payment is received and deposited into undeposited funds. Four, payment is taken to the bank. Step five, the deposit transaction is created in QuickBooks Online. And step six, the bank deposit is matched to the bank feed in QuickBooks Online. So that's the difference between cash basis and accrual basis in the sales and customer workflow. Here is a list of transaction types of sales and customers in QuickBooks. So we've got invoice. So this pretty much is transaction form for sales on account, meaning cash hasn't been paid at the time of sale, and the invoice gets posted to accounts receivable in QuickBooks, meaning that there's a balance due from a customer. Receive payment is another type of transaction. So you receive a payment from the customer, you apply that payment to reduce that invoice or reduce the account receivable balance for that customer. Estimates are transactions. It's a transaction form to quote or estimate a future sale that you can provide to a customer. If that customer's grabbing estimates for multiple contractors or companies, they're going to choose which one they want to go with. So this estimate doesn't actually hit the accounting system, doesn't hit revenue or anything like that. It's just an estimate. So it's a non-posted transaction that can convert to an active sales form if you won the bid. Credit memo, transaction form to reduce the amount owed on a customer's account and record the return of goods. For example, let's say you sold a product, gardening gloves or landscaping gloves, and the customer decided to return it. So you issue them a credit memo to reduce the balance due. Sales receipt, so pretty much this is transaction form that records cash back to the customer and the return of goods or services back to the client. So this posts directly as money's paid back to the customer. Refund receipt, transaction form that records cash back to the customer and return of goods or services back to the client. This posts directly as money's paid back to the customer. Then we got delayed credit and delayed charge. These are pretty unusual or not, doesn't happen often. So delayed credit transaction form that records revenue events that will be added later to an invoice later on. Delayed charge is pretty much a charge that's going to be charged in a future period, month or year or so on. So exploring the sales center, let's go to QuickBooks. Let's see. Here we go. So sales center, so get there. So this is the homepage, Craig's Design Landscaping Services. To get there, you can go to sales here. Click here, sales. And this is the sales center. So we can start with an overview tab. So on this first tab, so you can see income over time for the past month. You can change the period. It could be this week, last month, this month, last year, this year by month or by quarter. You can set up online and in-person payments through these types of, so Apple Pay, credit cards, and bank transfers. So those are QuickBooks partners. So Apple Pay, you can pay through Apple Pay. Bank transfers, things like that. We've got invoices. We saw this on the dashboard tab. It's kind of similar to the card on the dashboard. Shows what hasn't been paid. So overdue payments, ones that are overdue or past due based on the agreed upon terms. Not due yet, so 4,000. Right here, 2,000 not deposited, which means these are the undeposited funds of 2,000. And 1,600 of the sales have been deposited. Let's go to the next tab, all sales. So you can see here, so these are all the transactions related to sales and customers. So you can see here, actually, we created this first charge here for Amy's Bird Sanctuary, custom design. You can see there was $225 charged to Amy Birch related to design services. Up here, we kind of talked about, so 750 unbilled activity. This relates to time charged or services provided to a customer that hasn't been billed yet to the customer. Then unpaid, we talked about that. And we have, so the numbers below those amounts are like the number of bills or invoices that are overdue, or this one has 21 open invoices. Paid, you can see 12 invoices were paid for the past month. So when I look through this, kind of look at the status of these transactions to see what has been open or closed, or any items that are overdue. As you can see here, the ones that are orange. Maybe follow up with these customers. I think you can send them a reminder through an email. Send a reminder here to remind them to pay the invoice. You can filter this, kind of like Excel. You can filter here. You can see all transaction types, see if there's any estimates in here. So apply, you can see there's an estimate for these 4 customers. See the status of them. So these were closed out. There might have been one or lost. Let's see, unbilled income. Let's see if we have any. So you can see we have Amy's Bird Sanctuary, the 375 unbilled amount, and Video Games by Dan unbilled amount. So maybe create an invoice for these, bill the customer as soon as possible so you can receive payments as soon as possible. See any money received. See all the monies that received the past year, and you can filter by date, things like that. You can also actually add new transactions here. You can add an invoice, add a payment that has been received. You can create a new estimate, create a sales receipt after the service was provided. Credit memos, delayed charge time activity. Let's go on to the invoices tab. Pretty much the same bar at the top that we talked about. You can see here, the ones at the top, these are overdue. You can see how far overdue. You can see, for example, this one stands out to me, overdue 65 days. You can send a reminder here again. Then you can see here at the bottom, the ones that are in black font, that they're going to be due pretty soon. You can see due in 2 days, due tomorrow, due in 3 days, and so on. And at the bottom, you can see these invoices were already paid for. Like these first two right here, you can see they were paid for, but it's in undeposited funds. They haven't hit the bank yet, so it says not deposited. Customers. Here's your list of customers. Alphabetically, you can see Amy's Bird Sanctuary, and so on. Phone numbers if you want to get in contact with them. You can create customer types. So you can create new customer type. You can categorize your customers by gold, silver, bronze, whatever way you want, level A, level B, and so on. Create new customers here, import customers or new customer. And from the action items, you can receive payments for invoices that are still outstanding. Send reminder again, these are pretty much the same action items that we talked about. Products and services, we talked about this earlier too, and it's also on the sales center. That's pretty much it for the sales center. Let's go back to the PowerPoint slide. Question, Heather, is this one of our polls or?
Yes, this is. I can go ahead and pull this up for you.
Is it, let's see. It might not be on, I think.
I believe I did find it actually. It looks like there is a mention of a Craig, so I'm assuming that's probably the right one. I'll go ahead and launch it here. All right, if you wanted to go ahead and read that main question, David.
I think this is for the next question. I don't think there's a poll for this one. I think we're just gonna go over this one. So can we just end the polling real quick and?
Yep.
Yeah, sorry about that.
That's okay.
Okay, so let's go over this question real quick about sales and accounts receivable. So Craig has been working with Amy's Bird Sanctuary. We talked about Amy's business for a while. So Amy calls him to ask the amount of her outstanding invoices. Where would you go to find that information, and how much is the outstanding balance? So pretty much what I would go is, there's many ways to get there. Usually I go to sales, go to customers, and go to Amy's Bird Sanctuary, open balance, you can see 482. Another way to look for it or see all the customers with an outstanding balance is go to reports, accounts receivable aging summary here. You see here, as of today, here are the list of customers that are still owe you. So Amy's Bird Sanctuary, you see 482. You can also see which customers are current or 1 to 30 days overdue, or 31 to 60 days, or 61 to 90 days overdue. You can see here 156 Red Rock Diner. That's pretty long overdue. Maybe follow with them, and maybe it's not collectible and you might have to write it off. So yeah, let's go back to the PowerPoint again. So adding customers, pretty much, let's go back to QuickBooks again. Sorry about the back and forth. So go to sales, new customer here. So pretty much add the first name, last name, company name, display. Sometimes the company name and the display name, they don't, they're sometimes not the same. So display name will be what's printed on the check or on the invoice. Add the email here if you want to do online invoicing, be able to send invoices through QuickBooks Online directly to their email, and you can customize that email. The phone number, the website. You can check this box if this customer is a sub-customer. So billing address here, any notes that you want to add about this customer, tax information, the tax ID, or if they're exempt or 501c3 or things like that. Payments and billing, what their preferred payment method is, if it's cash, check, or credit. Type of credit card. You can agree upon the terms with the customer. You can make the customer pay due on receipts at the time of service within 10, 15, 30, 60 days. And those are all added to the invoice so the customer is aware. Language, you can change the language of the invoices if the customer speaks a different language. Any attachments about the customer, like contracts and things like that. Any additional information that you can add. All right, let's go back to the PowerPoint again. Here's an example of a sales receipt. So Craig's customer often pays him for his work on the spot. So in this example, one customer just paid Craig $30 in cash for a weekly garden maintenance job, and Craig could use some help recording the sale in QuickBooks Online. He stopped at the bank and deposited the money on his way back to the office. After that, so a sales receipt transaction is a receipt for a sale that was made and paid for at the time of sale. This is kind of the cash basis that we're talking about. In this case, the sales receipt records the income for the service Craig provided, which is a weekly maintenance job. The sales receipt screen in QuickBooks Online is a sales form that you can use. When used, it posts a cash basis transaction. This means that the income is recorded as earned and the payment is recorded as received. And I can show you how to do that in QuickBooks Online. Go here. There's multiple ways to get there, but this is probably the quickest way. So go to New, Sales Receipt. And let's say the customer was Duke's basketball camp, I guess. We're doing landscaping services for them. So product, so design services, quantity 1, rate $75. Then see taxable in California. You can add a discount percent if you would like. Add any messages, and save and send. So this is recording the invoice and the cash received. You can see balance due is 0 because the customer paid on the spot. Send and close, it gets sent to the customer, and there's no receivable balance on the books because it was already paid. Okay. Let's see, question, sales receipt. Okay, another question. Craig just completed a garden maintenance job for his customer, Kate Whalen, and she paid him $60 in cash. Create a sales receipt for Kate Whalen, and her $60 payment for gardening maintenance. Okay, let's do this one real quick. Show you again how to do it, because these transactions happen pretty often. So, new sales receipt. Let's go Kate Whalen. Thank you. $60 payment. Let's say it happened today. Payment method was cash because it was paid on the spot, or it could be a check. So garden maintenance. So gardening weekly. Let's go rate of $60, like that. Save and send. You can see here again $60. $60 paid, $0 balance due because it was all paid for at the spot after the service was provided. Invoicing. So it's very essential to stay on top of your invoicing to collect money, to make sure you get paid within agreed terms of the invoice. If you don't invoice timely, you don't get your cash timely, and cash is important to stay in business. So what is an invoice? An invoice allows customers who haven't paid at the point of sale to pay later. So here is an example of an invoice that we've seen. So for Craig Design Landscaping Services, I've got the address of the business. Here's a customer, Jeff Chin. You can see the invoice number, so we can keep track of if the customer has a question about an invoice, they can let us know which invoice number they're talking about. The date of the invoice and the due date terms is 30 days. So 30 days after the date of January 9th, 2020, the due date is 30 days after that. You see here gardening with activity description, weekly gardening service. You see 3 quantities for $25 each equals 75. There's a tax of 8%, which equals $81. So that's an invoice. Online invoicing through QuickBooks Online. QuickBooks will send an email invoice to the customer, and if enabled, they have a button to take the customer to online payments. So that means that if the customer is signed up to QuickBooks Online to make payments through QuickBooks, they can do that, make things more efficiently and easier for them and for you. Preparing an invoice example. Let's do that. So let's help Craig prepare his invoice. Craig just finished installing a new water feature in the yard for Travis Waldron, the current customer. So it's a $500 fee with a 30-day term. So we're gonna create an invoice, not a sales receipt, because we didn't receive the cash yet. So let's go QuickBooks. Same thing to get there. You can go to New, create an invoice. We got Travis Waldron. We got his email here. Terms were, we agreed to that terms of 30 days. Let's go invoice date of today. And the type of service or product that we offered to Travis was a water feature. Let's see. Let's go with the fountain. Let's go with the rock fountain. We agreed upon a $500 fee. So 1 for 500. Sales tax. Let's go California. See here, double check everything. You got a message here. $540 after the tax. Save and send. And here it is, the invoice that gets sent to Travis. Save and close. That's how you create an invoice. Okay. Entering received payments in QuickBooks. So this is pretty much receiving a payment on those invoices. It's not a sales receipt. These are payments received days after services were provided, or day after or later. So this is when a customer makes a payment on an invoice, recording a received payment transaction, decreases the receivable balance for the customer in QuickBooks Online, and it increases the bank balance or undeposited funds if you haven't deposited the check or cash yet to the bank. So enter received payments. Let's create an example. So one of Craig's clients, John Melton, just paid the remaining balance of his outstanding invoice number 1007. Record the received payment of $450 from John Melton. So QuickBooks. So John Melton was the customer who paid $450 on invoice 1007. So if you go to sales customers, we're here, and look up John Melton. You see here invoice 1007. The balance due is $450. The original invoice was $750. You can see here $300 was paid for a few weeks after the service was provided or the invoice was sent out, and leaving a balance of $450. So let's record this $450 as a payment received today. So received payment, John Melton, payment date was today. Let's go with cash. It's recorded to undeposited funds and not the bank account because we haven't deposited the cash into the bank account yet. Payment, save and close. So now you can see here that John Melton has $0 balance due and nothing is owed from John Melton.
Are you gonna do the bank deposit portion, David?
Bank deposit? Oh yeah, that's a good idea.
Yeah, so the reason why it goes to undeposited funds, which you might already know, is that, so let's say you have 5 checks and you're going to deposit those 5 checks in the bank. When you record each check individually, when you receive a payment for those, you're putting it into undeposited funds, and then you're going to deposit it in the bank. And then when you reconcile, it makes it nice and easy because you look at your bank statement and it has that one line of the deposit total, and it will tie to your QuickBooks reconciliation, the deposit total, so that you're not having to add up the individual transactions and reconcile that way. So that's a reason for the undeposited funds account.
So to do that, you go to new, in the other column, there's bank deposit. And you can see here for John Melton, you can see that $450 here. Let's say, so we cash $450. So this is all the cash on hand that we, for example, deposited today, let's say. So a total of $2,647 that's going to be deposited. So save and close, and this will increase the bank balance by that much, $2,647. Save and close. Well, let's click these actually. So bank deposited, $2,647 saved. So if you go to confirm it hit the bank account in QuickBooks, You can run a balance sheet. You can see here, it was undeposited funds, and now it should be in here in the checking account. So you can see here that 2647 shows up in the checking account now. It went in here. If I go back to the balance sheets and go to undeposited funds, it went out of here. You can see the 450 came in, came out. Same thing with the other. They will into basketball. It came into undeposited funds, and once it went into the checking account, it came out of undeposited funds. Oops. Let's go back to the PowerPoint.
We did have a question that came through the chat, and it is, do you issue a sales receipt when the customer can pay you right as the services are rendered?
Wait, sorry, can you say that question again?
Sure. It says, do you issue a sales receipt when the customer can pay you right as services are rendered?
Yeah, so when services are rendered and cash is received, that's when you create a sales receipt. You create an invoice when the cash or payment is going to be paid later on.
All right, I think that's the only question for now. Thank you.
Okay. Can you see my PowerPoint still? Okay. So I think this is a poll question. Oh, we already asked this one, so let's skip this one. Heather, can you run this poll question?
Sure can. Here we go. All right, what type of transaction is used to record a sale that was completed and paid for at the time of sale? A sales receipt, an invoice, or an estimate? All right, I'll give everyone a few more seconds here and then I will share the results. All right, I'm sharing the results now. If you want to go ahead and discuss.
Yeah, so what type of transaction is used to record a sale that was completed and paid for at the time of sale? Kind of already talked about it, sales receipt. All of you got it correct. Okay, let's move on. So now we're going to talk about expenses and vendors workflow inside of things. So we'll talk about the workflow, talk about the expense center, adding vendors and what type of information we should add for these vendors. For example, their tax ID for 1099 reporting and things like that. Entering expenses, bills, and paying bills. Expenses and vendors. So these are the transaction types. So expense, this is a form to pay vendors using cash, check, or credit card at the time of purchase. And this is a posting entry that gets posted to the balance sheet or profit and loss statement. A check is a form to pay vendors using check only at the time of purchase. A bill is an accrual basis transaction to record expenses on payment terms. So these are services that have been received, but payment hasn't been made yet. Pay bills is to record payment of the bills that we just talked about. Purchase order, these are non-posted transactions. Similar to estimates on the customer side. So these are requesting and tracking vendor purchases. Vendor credits, these are like refunds or maybe a discount that was given. Like credit card credit is a transaction form to record returns of expenses paid via credit card. Let's go over the expense center. So go to the home page, the dashboard, and go to expenses here. So you can see there's two tabs, expenses and vendors. So the expenses, you can see here are the expense transactions. So you can see the type of transaction, if it was a credit card transaction or expense, if it was a cash or a check transaction, or a bill that hasn't been paid yet. For example, this one, Norton Lumber and Building, was a bill, $25 that hasn't been paid yet. So you can schedule for payment or make a payment here. Purchase order, submitting a purchase order to Nick's Hardware. So these are non-posting transactions. Soon Nick's Hardware should send a bill, or it looks like here a check was already paid to Nick's Hardware for that purchase order. You can sort this page similar to the customers center. And if you're reviewing this and you see like some of these pays, like they're not in the right category or expense account, you can change it here. Like Nick's Hardware, you can change it from decks and patios, and maybe it was actually plants and soil. You can change it here directly. Once you change it, it's saved. You can add new transactions, bill, employee time, expenses, checks, vendor credit, or purchase order. Talk about vendors. Next column, here's a vendor list. All the vendors that you work with, you can activate them if you want, if you haven't worked with them in a long time, or if you don't plan on working with them. You see up here these bars. So one purchase order that's open of 125. Overdue invoices, you can see here, 4 bills are overdue, 848. Open bills, 1,600. And you've paid about 3,900 in the past month in bills. There's action items you can do here. So you can see open balance of 241 for this customer here, or vendor. You can make a payment here. Let's add a new vendor here. Add the first name, last name, company, display name as, similar to what we talked about with a new customer. Email address, and contact information, website. The vendor's billing rate, if you know that. Address, any notes that you want to keep. Attachments, maybe a W-9 to see if they're 1099 vendor, if you need to file 1099s for your vendors. So you can see here, track payments for 1099s, and these are occur at the beginning of the year, around January. Business ID number, account number, things like that. I think the 1099 thing is very important. It makes it, if you file 1099s, you can pretty much export a report from QuickBooks with all your vendors that are marked as 1099. So you can see how much income each 1099 received to file their forms for them. To make things more efficient and streamlined. You can also record what expense account each vendor goes into. So for example, if you created so let's go dues and subscriptions, like accounting fees, you can put it into accounting actually in here. So like when you create an expense, it will automatically pull this up when you pull the vendor name. Well, that's it for the expenses and vendors center. Let's go back to the PowerPoint. Adding vendors, we talked about that.
I'm sorry, we did have one question that came through real quick. I think it
Yeah.
was kind of latched onto what you're just talking about. The question is, how does the scheduled payment function work in QuickBooks when you have synced banking accounts with QuickBooks?
So the scheduled payments. So you can like, I'm not sure if this is answering your question, but you can like schedule checks or payments going out to vendors, or schedule like automatic withdrawals from your bank account. For example, Xfinity or telephone, they get automatically taken out of your bank account. So instead of recording that transaction each month yourself, you can create a recurring transaction saying there's an expense for telephone of $100 on this day each month. Just make it reoccurring so you don't have to enter it each month to streamline it.
Okay, great. Thank you. That was the only one so far.
Okay. So adding vendors, we talked about this. On entering expenses, show you how to enter expenses. So here, I use this new button a lot. So go to vendors column, expenses, choose a vendor. Let's go Bob's Burger Joint is the first one. Let's go with that. Payment account, you can choose if it was your checking account, if it was a check, or if it was a debit card, or you can use a credit card. Let's say use credit card. Payment method was MasterCard. Payment day was today. Category, let's go meals and entertainment. Description, say staff lunch meeting. Amount, whatever was on the receipt, $50. Save and close. You can see here, Bob's Burger Joint. If I go here, you see the $50 shows up as an expense. It was an entertainment. Bills, so this is what a vendor sends you when you owe them an amount of money. So when a bill is paid to a vendor, money goes out of the business. So bills, so these are services that were received but hasn't been paid at the time of service or product that was sold. So to create a bill, pretty much go to back here in QuickBooks, go to the home page, just go to new and bill, and let's say Cal Telephone is our vendor. Description, let's say telephone, September bill, say it's $56. So say it's tax, sure. So save and close. See, you must select a customer for each split. See.
I think you have to uncheck the billable box.
Oh, billable, okay. Thanks, Ray. Save and close. So you can see here, if I run a report of the accounts payable report showing what is due to each vendor. So I'm going to go to reports and go to what you owe section and go to accounts payable agent summary. You see here that bill that I just created. You see Cal's Telephone shows up here. That's current, $56.50. So when you create a bill, it's going to show up in the accounts payable report showing that this bill is owed. And to pay bills, to pay these bills, we can do is go here, new, pay bills. Let's just pay the Cal Telephone. Let's say it was paid through our credit card, sure. Paid today, save and close. Now, once that bill was paid, you can see that telephone bill disappeared because it was paid. as of today, saying that we don't owe them anymore. Get back to the PowerPoint presentation. Paying bills. Those can be paid one at a time or in a batch. Like we saw, we paid once one of the bills, but we could have paid multiple of them. When you pay a bill, you can pay either from a bank account or a credit card account. In our example, we used a credit card account to pay that bill. Both result in the same payment transaction, which reduces the balance due to the vendor. QuickBooks Online helps you flag any bills that's overdue in the expense center that we talked about earlier. Here's another poll question. Heather, can you start this?
Yes, let me get that pulled up for you. 1 second. All right, there you are.
Let's see. Okay, so I'll read the question. So Craig has a new order from a customer. He needs to buy some paving from his vendor for the customer's job. He has 60 days to pay for it. Take a look at the vendor workflow. Craig buys paving on credit, which is step 1. Step 2, the vendor bills him. And what 2 steps should come next? So we have answer 1 will be Craig makes payment. Then step 4 will be vendor credit. Answer 2, step 3 will be Craig creates bill in QuickBooks Online and makes bill payment. Answer 3, Craig creates bill in QuickBooks Online and issues a vendor credit. Or answer 4, Craig creates expense in QuickBooks Online and makes a payment.
David, this is Sharon. Can you repeat the question? Because I didn't understand what you were asking us there.
Okay. Yeah, thanks, Sharon. So what I'm asking is what 2 steps should be next after these first 2 steps? So take a look at the vendor workflow. So Craig buys paving on credit. And next step in the workflow, vendor bills him for the paving. Then what 2 steps are next?
Okay, I didn't see that, the screen, so I was kind of confused at what it was. Okay, that makes sense. Thank you.
Yep.
And with the polling answers there, look at the and. It says Craig makes and then or Craig creates 1 and then 2, just so you guys know. There is 2 answers in each of them.
That'd be a tricky question.
Right. And I'll give you guys about 30 seconds or so when I start getting some answers in. Yeah, David, if you wanted to go ahead and repeat the question.
Okay. So Craig has a new order from a customer. He needs to buy some pavement from his vendor of customer's job. He has 60 days to pay for it. What are the workflow steps after these 2? So Craig buys pavement on credit. First one, vendor bills him. And what 2 steps should come next after those?
All right, and it is an anonymous answer, so if you guys want to go ahead and give it your best guess, it's not going to show who answers, and then we're going to explain the results after. All right, I'll give the last few just a few more seconds here to finish up and submit their answers, and then I'll end the poll. All right, I'm going to go ahead and end it, and then we can discuss.
Okay. So So the steps, so Craig buys payment on credit means that he didn't pay at the time of the product was received or the service was rendered. So the vendor bills him for that, saying like you can pay later, for example. So what 2 steps should come next? So since Craig paid on credit or buys it on credit, answer 2 is the answer. So Craig creates bill in QuickBooks Online saying that he's going to pay later and not at the time of sale. And then once he does that, he makes a bill payment after he creates that bill. It could be a day later, a week later, a month later. Tricky question. So number 2 was the answer. Okay, let's go on to the next screen. Let's talk about banking. The banking module in QuickBooks Online. We talked about this earlier in the class. So you can connect your bank accounts to QuickBooks Online to automatically pull the bank transactions, so you don't have to post them manually yourself. So you can connect your checking and savings accounts, investment accounts sometimes, credit cards. You can create bank rules. So if you have like recurring transactions, you can create rules for those. And then there's also a matching feature in there. And I'll show you. So here's Craig's company. Go to the dashboard. Let's see. You go here, banking. Just click here, banking. So you can see here for Craig's company, you can see at the top here, you have 3 accounts that are linked to QuickBooks Online. You got the checking account, the savings account, and the credit card, the MasterCard account. You can see here the checking account. You can see the bank balance shown on the bank online, their website, whatever bank they're using. They have a negative $3,621 balance, but in QuickBooks we have a balance of $3,848, and that difference could be to undeposited funds that hasn't been recorded yet, or outstanding checks, deposited in transit, and things like that could cause that difference. Like the savings, similar, MasterCard, similar, that could be like a return on credit, or sometimes for credit cards, there's pending transactions. So sometimes it doesn't sync with QuickBooks until it's cleared, the credit card statement. Sometimes it takes a few days after the transaction is entered, or when the card is swiped, it takes a few days to clear. You see down here, so these are so for the checking account, these are the transactions that cleared the bank that is synced to QuickBooks. You can see here's a description of the transaction. The payee, sometimes it grabs the payee, sometimes it doesn't. You can see Hicks Hardware grabs the payee. You can see that one record was found that was already recorded for Hicks Hardware for 2028.75. That was already recorded in QuickBooks. So you don't want to record that transaction again, because if you record it, it's going to be double recorded. So what you want to do is match those, match it, so it doesn't record that same transaction. So you can see here the ones that say like one record found, those are usually a match. If you know for sure this transaction was already entered. Like these ones up here, these could be like a rental. Maybe these weren't recorded in QuickBooks yet, so you can add it here. So for a rental, you can see spent. Oh, you can just add it here. Click the expense or income account. So category, you select, let's say a rental, let's say it's vehicle. see, for the expenses, it's called automobile expenses. It's like payee, a rental. If it's not a payee yet, you can create a payee here. A rental. Click save, and you can add the details later on for the vendor. And just click add. If you want to add a memo too, you can add a memo. Or if you know it's related to a customer project, you can select which customer project it relates to. Just click add. So these are the ones right here are for review that haven't been entered yet. So you want to clean this up to make sure all these are resolved somehow. Categorized, these are the ones that have been recorded or categorized already. You can see a rental is the one that I just recorded. This one right here, the middle one. Excluded are like transactions that we excluded for some reason. Usually you shouldn't have anything that's excluded because these are all transactions that have cleared the bank. So to reconcile properly, you need to have these transactions entered. To link another account, you can go here, link account. Here's some banks that QuickBooks can link to. There's many more. Yeah, that's pretty much it. Let's go back to the PowerPoint. QuickBooks also has a mobile application that you can download on your phone. You can do a lot. You can create invoices and sales receipts and estimates on the spot to the customer. Access customer invoices, convert estimates to invoices and send those to the customers, all from the phone. Receive payments like cash or checks or credit card. Track your mileage and receipts, things like that. So task list. So these are things I recommend you do on like a daily basis, weekly basis, monthly, quarterly, annual basis to assist you with your end-to-end accounting lifecycle. So for daily tasks, I recommend you check the cash balance every day to make sure you have enough money on hand to pay a bill, or if you need to bill your customers and get payments for those. Weekly task, record transactions on a weekly basis that clear the bank or bills, things like that. Document and file receipts. Review unpaid bills, like old outstanding bills or bills that are going to become due soon. Prepare and send invoices. Pay vendors and sign checks. And review projected cash flow of what you're going to have to spend for bills or how much money you can receive the next week or so. List of monthly tasks that you can do. Let's balance your checkbook, which is reconcile the bank, review past due receivables, follow up on those, send reminders to QuickBooks, or email them or call them. Look at your inventory. If you have inventory, see if you need to buy more inventory or sell them before they expire or get old or whatever. Process payroll. That could be monthly or weekly or bi-weekly, depending on your payroll cycle. Review your financial statements, your profit and loss versus budget for the month or for the year, quarterly. See how you're comparing against what your goals are for the year or period. Review your balance sheet versus prior period and see your cash balance is going up or going down. Your liabilities, see if they're going down, for like loans and things like that. Yep. Quarterly task, file estimated quarterly taxes, review quarterly reports, payroll reports. Shereen will talk about that later on in class 3 or 4, I believe. Review sales tax and make payments, and prepare annual profit and loss estimates. Annual task, same thing as task before, review past due receivables, follow up on those. Maybe they need to be written off. If you don't think you're going to collect on those, review your inventory again, do an inventory count to make sure it matches what you have on your books. All your 1099s that I mentioned before, your W-2s, and review and approve your year-end financial reports and tax returns. And that's it. Is there any questions, Heather?
Yes, actually, we've had quite a few come through here, so I'm gonna go ahead and start where they came through. So one question is, should we create more than one bank account to put taxes and prepaid and accrual funds in?
That's a good question. No, I think that's fine. Just having one bank account is fine. I think having like a chart of accounts, like accrual account, to know what you need to spend later on, and like prepays, knowing like which period it relates to. I don't think you need to create a new bank account for these.
Okay, thank you. The next question is, should we have a limit on the buildup of vacation/sick time? Also, how does PTO time work, and how do you put that in QuickBooks?
Heather, sorry, you cut out a little bit. Could you repeat that question?
Yep, sorry. I'm so sorry. It was kind of a two-part question. So the first part of it is, should we have a limit of the built-up vacation/sick time?
I think that's, or Shereen, you want to answer that?
Sure.
Carol.
I think that's your company's policy. It really depends on how much sick time or vacation time you want to, a maximum amount that you want to give your employees. And Heather, can you repeat the second part of that question?
Yes. The second part was, how does PTO time work? How do you put that into QuickBooks?
That's a good question. I will have to look at the specific section. I know that there's a time off section in QuickBooks where you'd enter in the accrual rate and the maximum amount of vacation or sick time that they can reach before they stop accruing each pay period.
All right, thank you for that. Next question is, how do you track multiple credit cards for employees and manage that?
Good question. You can link all credit cards to QuickBooks Online, and you can name each credit card for each employee. And to manage it, depends on your policy. Like, do you want to review all the transactions for these credit cards? We just need a credit process. There's lots of expense management softwares like Expensify, for example. Like, the manager can approve these credit card transactions and approve them. If they don't approve, just follow up with the employee on what the purchase was and things like that. Yeah.
All right, thank you for that answer. Next question is, what recommendations on terms with vendors should we try to get for best practices?
Good question. I guess that depends too. Usually I see I guess it's a type of service that you provide too. But usually I see within like 30 days, and make sure you follow up as you get closer to that 30-day term. Make sure they receive the invoice, and just to remind them.
All right, great. Thank you for that one. Next one is, how much cash flow should you keep on hand when you are making a good profit?
Oh, that's a good question. I think that might be
good questions.
I think that depends. I think Josh, who's our colleague, will present on that in a future class on the dashboard reporting and cash forecasting. I think that might be class 5 or 6. And he'll talk more about that. He's more experienced on that side.
All right, great. So go ahead and whoever did ask that, if you want to table that for one of our next sessions. Next question is, how can you make sure you're using your assets tracking / maintenance schedule in QuickBooks?
Track your, I like the.
That's kind of a two-part question. So I think the first part is how can you make sure you are using your assets? And then how do you track / the maintenance schedule for those in QuickBooks?
How to track them? You can, there's like an inventory module to track those assets that you can look into, or I can show you later on after class if you reach out to me. Or some companies have just a spreadsheet on the side to track their prepaids and fixed assets. And what was the other part, the second part of the question?
I'm not, I guess maybe I'm just not super clear on the question, how it was typed in. So if that person wants to clarify, you're welcome to chime in, but it is, how can you make sure you are using your assets?
This is Sharon, and I asked that question. And so what I was trying to get to is like, say, you know, we're in COVID-19 right now and things are a little bit stagnated because of just of what's going on. And so when, say like you have trucks, right? Yeah. Or equipment and it's just sitting, you know, at what point, you know, do you like something triggers to say, wait a minute, you know, even though because you could be making money, but you have assets sitting, you know, how do you, you know, put something in place to help you, you know, make sure that you're not, you know, because you can get busy with other work and forget that you have, you know, assets that you're not utilizing and they're just sitting. Yeah.
I guess what we can do is like on a monthly basis, when you look at your balance sheets and your P&L, look at your assets. I'll see like, oh, there's you know, 2 or 3 trucks. Forgot about these. And also, the vehicles are depreciated as well on your tax return, or if you're on accrual-based accounting, you depreciate those on a monthly basis. Or your tax return, you depreciate those on an annual basis. Yeah, I'm not sure if I answered your question.
Yeah, because it kind of ties into the next question that I asked, and I couldn't, for some reason, I just could not think of depreciation. So on the next question, it kind of ties in as far as what do you recommend to use straight depreciation or based on how old the vehicle is, or how much you're using it, so that, you know, you can maximize or leverage, you know, your balance sheet?
Yeah, that's a good question. I think, Shereen, do you want to answer this one?
So I have a couple of thoughts on that. So as far as your financial statements go, you know, straight line depreciation makes sense to maximize your net income. But then when you're thinking about your taxes, you really want to think about, you know, bonus depreciation, Section 179 depreciation, whether or not you should depreciate that way to lower your taxable income. Or let's say, you know, this year you know that you have $100,000 in taxable income, but you know going forward you're going to be at a very low taxable income. Well, you want to take most of your depreciation this year, but if in future years you're going to have higher income and you have low income this year, maybe not doing, you know, Section 179 or expensing your assets until later is better for you. So not doing it this year, but depreciating it over time. So it kind of, it depends again on how. I have some clients that depreciate based on a tax basis. So they're depreciating their assets, based on their tax return. I have some clients that are doing just straight line depreciation.
So for bonding purposes though, and when the underwriter looks at your financials, for bonding capacity, what, are they going to be looking at, of how much money, how much cash flow you have or your assets? I mean, how does that work? Because this class is about bonding. So I want to really.
Yeah, and I can confirm, but my understanding is that they're looking at cash flow, and I don't know if anyone else on the call has any other experience with this, but my understanding is that they're actually looking at your cash flow, so they should know that depreciation expenses are not part of your cash flow.
Okay.
Yeah.
Got it. Okay, thank you.
All right. Next question is, does QuickBooks have a cash flow function?
They have a cash flow report. I don't know how functionable it is. As with any accounting software, sometimes the cash flow reports don't necessarily give you the output that you need. I know QuickBooks has a plugin or different plugins that you might be able to see in that app link I sent that can provide different cash flow softwares. We usually use Excel just as a basic quick cash flow analysis. Again, something Josh might be able to touch on a little bit more.
In future class, Josh will talk about that.
All right, perfect. That is actually all for the questions that came in through the chat. Did anyone have any last minute questions they wanted to raise their hand for, or go ahead and send through the chat and we can ask those for you? Go ahead and give everyone a few seconds here. All right, I don't believe I'm seeing anything come through. We will be sending this presentation out to everybody. I believe Jessica said it was tomorrow, so keep an eye out for those. We'll also be having another webinar on Thursday this week, so please make sure that you register for that. I want to thank you guys all for joining, and thank you to David and Shireen for the awesome presentation. Jessica, did you have any final remarks here? All right, looks like we're good to go. We look forward to seeing you guys on Thursday. Everybody have a great rest of the day, and thanks for joining in today.
Thank you.
Thank you, everybody.
Bye.
Bye-bye.
Bye.